Okay, let's dive right into this because wow, there is a massive shift happening right now. And honestly, if you weren't paying attention, you're going to miss it entirely. We constantly hear the hype around cryptocurrency, right? But in this explainer, we're looking at something much, much more profound. We're talking about a true story of survival, of innovation, and how digital connectivity is helping a rising demographic completely leapfrog traditional economic barriers. Across Africa, you've got this entirely new generation that is flat out refusing to be locked out of the global economy. They aren't just participating in some financial revolution, they're literally leading it. So, to understand exactly how they're doing this, here is our roadmap for today. First, we'll look at the crypto generation. Then, we'll break down the foundations of the blockchain. Third, beyond trading, Web3 skills. Fourth, surviving the crypto risks. And finally, number 5, long-term wealth creation. I want to kick off our journey with this incredibly powerful realization from our source material. The future of wealth creation is no longer limited by geography. Just take a second and think about how game-changing that is. For decades, right, where you were born pretty much dictated your financial ceiling. But today, someone sitting with a smartphone in Lagos, Nairobi, or Cape Town has access to the exact same global financial tools as a big institutional investor sitting in New York or London. Global connectivity has completely rewritten the rules of the game. All right, part 1, the crypto generation. So who exactly is leading this charge? You see, this isn't just about age, it's an entirely new way of thinking. Now, what's really interesting about this is why young Africans are adopting these technologies so incredibly fast. Let me tell you, it's not just for fun. It's out of absolute necessity. Every single year, millions of young, highly educated people enter a workforce that, frankly, just doesn't have enough jobs for them. They're facing heavily restricted access to global markets, where traditional banking makes sending money across borders painfully slow and ridiculously expensive. And on top of all of that, they're constantly battling high inflation rates that just eat away at their local purchasing power. These specific, very real traditional economic challenges, that's exactly what pushed young Africans to seek out alternative financial tools. They desperately needed a solution, and the digital economy stepped up and provided one. Moving on to part 2, foundations of the blockchain. We're going to shift our focus right now from the who and the why to the what. Okay, so at its core, cryptocurrency is simply secure digital money that operates on decentralized networks, rather than being controlled by a single government or institution. Now for us, the real defining feature here isn't just the cryptography part, it's the decentralization. That's the game changer. It allows people to transfer value directly to each other, totally bypassing the traditional middlemen and central authorities that historically restrict access. Now, if you're wondering what the blockchain actually is, think of it like a massive classroom where every single student maintains an identical notebook, right? Whenever a financial transaction happens, every student writes it down. Now, if one student tries to cheat and erase or alter a record in their personal notebook, well, all the other students' notebooks still have the correct info. So that fake record becomes instantly obvious to everyone. That is exactly how the blockchain works, just with thousands of computers around the world maintaining identical copies of the record. It creates this unparalleled level of transparency and security, and this brilliantly illustrates how a crypto wallet fits into all this. A crypto wallet is simply a secure digital key holder that stores the keys, giving you access to your assets on the blockchain. Your public key acts kind of like an email address. It's what you use to receive funds. But your private key, that is the ultimate secret password. Whoever holds that private key completely controls the assets, no exceptions. All right, part 3, beyond trading, Web3 skills. It's time for a major mindset shift. We need to transition from asking, how do I trade coins, to asking a much better question. What Web3 problems can I solve? To really grasp this, we have to look at how the internet itself has evolved. Think about Web 2, the internet we use every single day. It's the social internet. You generate all the value, the photos, the posts, the videos, but these massive tech companies control your data and they extract all the financial value from it. Web 3 is fundamentally different. It is the ownership internet. Through decentralization, users actually own their digital assets and they earn direct rewards for their contributions. Listen, this isn't just some neat tech upgrade, it's a massive fundamental shift in economic opportunity. Because of this, participating in crypto is about so much more than just staring at price charts all day hoping a line goes up. Think about it. Every single blockchain project out there needs a real team to survive. They need content creators to write articles and educate the public. They need graphic designers to build out their brand visuals. They absolutely need community managers to run their Discord and Telegram channels. They need software developers and they need digital marketers. These are diverse, real-world career opportunities built entirely around providing actual value to the ecosystem. And the best part? You can do them from literally anywhere in the world.
Which brings us to part 4, surviving the crypto risks. Look, as with any massive new opportunity, there are predators. We absolutely have to address the dark side of the space.
So the crucial point is this golden rule. I want you to read it, memorize it, and live by it. If it sounds too good to be true, it probably is. Period. The crypto space is absolutely overflowing with hype. It's full of bad actors promising guaranteed profits and overnight wealth. Please do not fall for it. Legitimate investments always involve risk, and building true wealth takes time. You have to combat that allure of the get-rich-quick myth with solid, grounded education. You need to be actively on guard against some very specific threats. Phishing attacks, for instance, use fake websites that look identical to real ones just to steal your passwords. Then you have impersonators who will actually pretend to be customer support to trick you into handing over your access. Ponzi schemes, they just use new investors' money to pay off the old ones until the whole house of cards collapses. And honestly, perhaps the most insidious risk of all is FOMO, the fear of missing out. FOMO drives terrible, highly emotional investments. So the best practices here are totally non-negotiable, guys. Write your wallet's recovery phrase down offline on a physical piece of paper. Never ever share it with anyone, and always enable two-factor authentication on every single account. Finally, part 5, long-term wealth creation. If you can successfully secure your assets and manage those heavy risks, you are ready to replace that fantasy of a get-rich-quick scheme with grounded, long-term economic empowerment. Let's move to and see how this builds out, because so many beginners treat crypto entirely like a casino. Look, gambling relies heavily on luck and hoping for quick rewards. The decisions are totally driven by emotion. Real investing is the exact opposite. It relies on rigorous research and planning. It focuses on broader, long-term macroeconomic trends, and every single decision is driven by cold, hard discipline. A successful investor follows their well-thought-out plan, not their panic. Now, executing this disciplined approach requires a solid blueprint. Step 1, develop valuable skills to earn a consistent income. You have to have cash flow. Step 2, build up an emergency savings net. Only then do you move to step 3, which is investing gradually using dollar-cost averaging to really smooth out that crazy market volatility. Step 4, diversify responsibly across multiple assets. And step 5, continue learning so you can actually understand market cycles. Building real wealth is a marathon, guys. It's definitely not a sprint. So we've seen how an entire new generation is using the internet not just for scrolling and entertainment, but as a legitimate, powerful platform for financial liberation. They're learning the foundations, they're building real Web3 skills, managing extreme risks, and deploying disciplined wealth-building blueprints. The digital revolution we just walked through in this explainer isn't some distant sci-fi possibility. It is happening right now, across the globe, and particularly across Africa, completely reshaping the very definition of opportunity. So I want to leave you with this final provocative thought to ponder. The future of the economy is undeniably digital. How prepared are you to participate in it? Keep learning, keep building, and thank you so much for joining me on this explainer.